So how did I make $792 trading Amazon call options? So looking at Amazon at 942. So Amazon at 942 on the 30-minute time chart. Let's see. So basically this 10 candle right here, I got into Amazon call options as soon as it landed on the 9-day moving average, waited for a bounce, and then at 9:44, I'm pretty sure Amazon broke the 9-day moving average, and then it landed on the 20-day moving average, and so I bought more Amazon call options on the 20-day moving average, and then I just waited for a bounce off that 20-day moving average. I did want to buy more Amazon call options once it landed on the 50-day moving average, but I was like, I'll just wait, and see what happens. If this does decide to break that 50-day moving average, I'll cut my losses and just move on to the next trade and just take my 5 or 10% loss. But actually, Amazon landed on that 50-day moving average, bounced off of it, and so within that same candle at 9:57, I sold out the position, and that's basically how I made $792 trading Amazon call options. So it's like basically what I've been telling you guys. You have to use the moving averages as your entry points, whether it's playing calls or puts. In this case, I played call options, and the reason I played call options on Amazon in this trade was because these pre-market candles were pretty much riding the trend of using the 20 or 50-day moving average. You could say this candle slightly used the 50-day moving average, but not really. But this candle, when it got a hold of the 20-day moving average, it used it. And so when this candle right here too, the A candle, it used the 20-day moving average as support. And then you can see that these two pre-market candles, this one and this one, use the 9-day moving average. So to me, that was considered that the trend was going to be really strong for Amazon in case it did decide to use the 9 or 20 or 50-day moving average throughout the day. Now you can obviously see that throughout the day it pretty much failed to hold itself above those three moving averages I just mentioned. So what happened is it completely broke the trend. You can see the 9-day moving average crossed below both moving averages, the 20 and 50-day moving average. So basically it was just more of a observe the trend, try to use the trend, in this case try to use the moving averages as your entry points, and basically just get in, get out, and just move on to the next trade. So let's see if we can make an example. Let's make an example out of Amazon, this same trade, right? So let's see. Okay, so let's say you bought okay, here. So let's say you bought Amazon call options as soon as it landed on the 50-day moving average, right? You're like, okay, well, I'm confident that it pretty much isn't going to hold itself on that 9 or 20-day moving average, but there's a possibility that it could hold itself on that 50-day moving average. So you bought Amazon call options once it landed on the 50-day moving average. You wait for a bounce, and let's say this same candle doesn't, for whatever reason, see a bounce. Okay, you'll just have to wait for the next candle. Once you see that next candle happen and it starts approaching that 20-day moving average, that's your selling point. That's your exit point that you want to sell out your position out of. So basically, step one, get in, once it lands on the 50-day moving average, and let's say that this same candle does not bounce off the 50-day moving average and approach that 20-day moving average, okay, move on to the next candle. Let's see if that next candle can approach that 20-day moving average. Once it approaches that 20-day moving average, sell out your position and just move on to the next trade, and you should be good to go. So basically, just try to be realistic of your goals for the day. Try to be realistic of like your percentage targets that you're trying to aim for that day. Try to be realistic. Don't try to be trying to aim for 50, 100% gainers. Like I said, I keep on saying this. Is it going to happen every day where you're going to reach that percentage targets? No, it's possible, it's doable, but that's only if you're trading 1 day options or 0 day options, really. I feel like, if you're a beginner, I'd suggest, stick to your confidence level. So if you're feeling confident in a trade, okay, by all means, go ahead, do whatever you're going to do. But if you're not feeling confident and you know your discipline already and you know where to cut your losses and when to get out, good, you're good to go. You know what to do. You know the game already. I'm going to say this like repeatedly. Trading, you'll always take wins and you'll always take losses. You're never going to have consecutive days where you're like, oh yeah, I'm winning. You're always going to have days where you're winning, and you're always going to have days where you're losing. So, but the thing the way I see it is that if you're losing, if you're having losing days, at least you know when to cut your losses. You're already disciplined to know when to take your wins, and you're already disciplined when to take your losses. Most people struggle, knowing when to take your wins. The reason with that is because most people are really greedy. I was, that person at one point, and then people don't know when to cut their losses. A lot of people hope for the best. That's usually, if you hope for the best, you're at that point, you're just really gambling. I was at that point too at one point, but once I learned to, self-discipline myself of when to take my wins and when to cut my losses I was like, okay, I think I'm ready to, take this to the next level. I feel like, with this discipline, it should be enough for me to take advantage of opportunities that occur in the market. So that's pretty much it. Self-discipline yourself, know when to cut your losses at, try to know when to take your wins at. And if you want to use a free website to know when to search for opportunities, use finviz.com, search up mega cap stocks, and then try to look for the stocks from worst to best and try to analyze those stocks on the 30-minute time chart, and try to use the 9, 20, 50, 180 or 200-day moving averages as your entry points, whether it's playing calls or puts. That's pretty much it. I'll see you guys in the next video. This is not financial advice. As always, take care and bye.